Hey everyone, this is John Spears. I'm a mortgage broker in Austin, Texas. I do loans all over Texas, and I wanted to just kind of do this video and talk about something that's really important, and that is how we structure the loan. You know, pretty much every day somebody calls me or several people call me and they really just have one question. It's always, what's your rate, or, hey, I live in Lubbock or Houston or Austin and just want to know what your rate is. Well, the rates are important, but what I wanted to talk about in this video is that how you structure a loan is actually more important in many cases than the rate itself. In fact, I'd probably say it a different way. How you structure the loan could actually save you more money than having a better rate. And a lot of times people don't really understand that, so I thought, well, seeing is believing. We can just kind of look at a couple of loans and we can see the importance of how we structure the loans, specifically as it relates to mortgage insurance. Now, I've been in the business for 5 years, and I've noticed that there are really two types of people when it comes to home loans. The first type is really that, just give me the numbers and then I'll make a decision. And for those people, what I would just encourage you to do is just go ahead and take 5 minutes and call me. My phone number is 512-996-8194. And then, or you can just apply online, and you'll notice if you go to my website, the My Lending Place website, I do mortgages, I also do refinances, and I also do a lot of home equity loans. And so every one of these has interest rates associated with them. And so I want you to have the best rate, but I also want you to see that how you structure the loan is really more important than the rate itself. You could just click on the green button, and then you'll notice on the application page, I make a note that only the federal government has a higher level of encryption than this website. So this is a secure website, and then once you complete this out, it just takes a moment. You could send me the application, and then I'll call you back, and we can just kind of look at the loan, kind of in a short and sweet type of fashion. However, some people really like to look at the details of the loan, and if you're that type of person, I wanted to look at the actual mortgage software, and let's compare two loans back to back and see which loan is best. Okay? I know looking at mortgage software is not the most exciting thing in the world, but buying a home is probably one of the biggest investments that you'll make, and so having the right mortgage is so important. In fact, a lot of times people refinance homes not because they really need to, it's because they got into the wrong mortgage. So I'm one of those guys that sometimes an ounce of prevention is worth a pound of cure, and so if we can get into the right loan from the beginning, it can save you thousands and thousands of dollars. So let's just look at two different loans, and I'm just going to pretend as though you are calling me and you are wanting to buy a $175,000 home. Let's just look at two loans here. In today's world, you're going to have to put about 5% down. Okay? So I'm going to show a down payment of 5%. There are some people that are offering 3% loans. Now, I offer 3% loans as well. However, 3% loans have higher payments, higher rates, and higher closing cost. So to keep everyone down, I like to offer 5%, but sometimes people, they don't have an option. They don't really have the full 5%. But for this example, I'm going to show you a 5% loan. Another thing is, I don't really know when you're going to look at the video, but I'm going to use a 6.5 fixed rate. I'm a huge believer in fixed rate loans. In fact, the only way that you can really get an ARM from me or an adjustable rate would be as if you specifically ask for it, because otherwise I'm just going to assume that that you do want a fixed rate. Okay, a 5% down loan. You can see I'm using a 6.5% rate. Now I'm going to put some mortgage insurance in here, and you'll notice that the mortgage insurance increases the mortgage by $134. Okay, let me just put this in a kind of a quick and easy email. I found that most people just want me to show them a few loans, discuss the closing costs, and kind of make it simple and sweet so that they don't really have to, there's no sense in getting pages and pages of amortization tables and so forth. So let me just put this on an email, just as though you and I were doing this loan right now. You know, when someone calls me, they don't really want to listen to a mortgage, so I try to just show them the numbers as often as possible. So in this case, you can just see that I've created an email. If you and I were on the phone right now, I would just put yourname.com or your email. And then I would show you, okay, well, we talked about a loan that has PMI, so let's look at that as an option. And then we have loan number 2 here, loan number 3, and loan number 4. And we can look at all the loans, and then once we get off the phone, I send you the email, and everything is really nicely presented in a way that you really know the numbers without having to go through pages and pages and pages of information. Naturally, if you have a question, you can always call me back, but I found that this makes it this is the easiest way to do it. Now let's look at a no PMI loan, okay? Because that's really what we specialize in here at my lending place is giving people the lowest payment so that they don't have to pay the PMI. You'll notice that I've made this 80% loan. I've put a 20% down payment. It's the same house price at $175,000. Now I'm going to create a second lien here. I'm going to take the mortgage insurance off because that's what we specialize in here. And then I'm going to make a second lien for the same amount of money. Okay, I'm going to use an 8% interest rate. Now let me make a quick note here about working with a broker or working with a bank. Some people think that if they work with a bank, they're getting a better loan. But really, the work with a broker is your best option because, number one, we're licensed. Most people who work at a bank aren't even licensed. You don't know if they've worked there for 2 weeks. Whereas a broker, we have to meet strict guidelines. Another thing that's really related to you is we have, as a broker, more options to show you. Now, when you're wanting to do a no PMI loan, you're doing a no PMI loan, so you want to work with a broker who has many different loan programs. Whereas if you go to Bank of America, they're only going to show you one set of programs, not necessarily the best loan for you. Okay? And that's specifically related to second lien rates because brokers have the best second lien rates, and you have to do a second lien if you're going to avoid PMI. So let me put this on the email. But before I put it on the email, let me make a really interesting point because this is very important. Whenever you do a no PMI loan, your payment, or excuse me, your rate actually goes up on your first lien because it's considered a higher risk loan to do a no PMI loan. But I mean, I can give you a longer explanation when you call me, but just suffice it to say, when you're trying to avoid PMI, you have a higher rate, but you have a lower payment. Okay, now let's look at these two loans side by side, and you'll really understand what I said at the beginning of the email, or excuse me, the beginning of the video, that the way you structure a loan is actually more important than the rate. Because look at this. If you were to call me and say, hey John, what's your rate? I might say 6.75, but if you were to call a bank, they would say 6.5. Now, you probably would be tempted to go to the bank because you feel like the 6.5 would give you a lower payment. But really, the way it's structured, the 6.75 is actually the better loan for you. Okay? And in this case, let's just do the math here. $11.85. It's $85 less per month. Now, and that's pretty significant if you're going to keep this home long term. Let me go ahead and shut the video off right now. I really encourage you to call me if you have any questions. I'm always a phone call away. Remember, we do mortgages. We also do a lot of debt consolidation loans. And we're always a phone call away. Thanks for your time.